Good morning and welcome to the XM.com weekly market update. With me again is Peter McGuire, the CEO of XM. Good morning, Peter.
Good morning, Andrew.
Welcome back.
Thank you.
Let's head over to the UK. The CPI numbers came out last week, 1.7%, which was a little bit lower than expected, and the lowest rate they've had in about 3 years. So it's good that inflation is coming down, but on the other side, is the economy under a bit of pressure?
Yeah, growth numbers and so on. It's going to be an interesting lead into naturally Christmas and whether we're going to see any further rate cuts between now and then. We all understand that the Eurozone has had three pretty successive cuts, 75 basis points, and the POM's going to follow suit and really lead the charge. It just depends, but there's structural weakness all across the Eurozone and naturally into the UK.
Yeah, it looks like, and it makes sense what's happened to the pound there. It's come off quite a bit, and two things, obviously, the likelihood of lower interest rates in the UK and potentially not so much lower in the US.
Or even no cut on the November 7. We spoke off air and there's every chance. I mean, you're talking to Larry Summers, you hear different analysts or different pundits or professors of finance, and everyone's got naturally an opinion, but there's a big contingent out there now that are saying, look, there's no need for a cut. And who knows? But when you're looking at something like the pound, and I'll use the Canadian dollar as an example, from their September highs, it's off around about 2.7, 2.8% in that small window of time. And you've seen that big move. It's been incredible volatility for currency traders.
Yeah, it certainly has. So plenty of movement. Once those interest rate markets get moving, it just flows through to pretty much everything.
Oh, yeah.
So, commodities. We always talk about gold.
Yep, it's little brother.
Silver.
Yeah,
extraordinary. 12-year high at the moment.
Yeah, it's come home like with a wet sail, and it's just been incredible since September, and put on $6 in that time, nearly $7. That's an enormous move when you're looking at from where we were. We channel traded between May and September. People were saying it's ready for a breakout, and it didn't happen, but now it's off, and who knows where it can go. Does it hit back to those all-time highs under the whole bunker hunts? Remember they tried to corner the market in the 80, 81, I think it was.
You'd have to go a bit higher than this.
Yeah, 42, I think it hit, but and it seems to have momentum, but the issue is you've had structural decline as far as investment in the whole capex market of silver mining and the huge industrial demand that it needs globally because of, it's in everything technology wise. So this is going to be the one that watch, we've said it for a while, gold to silver ratio, study it closely.
Yeah. And gold, once again, keeps on keeping on, doesn't it?
Boom. What do you say? I mean, the momentum and the velocity since it hit 2,600, it's put nearly $150 on in that probably 3-week period, 3.5. I don't think I've ever seen it as aggressive. And then you roll it back to all the way to March, we were at 2,100, 2,000, and it's just been dynamic.
Yeah. And even those pullbacks over the course of the last 12 months have been pretty minor in the whole scheme of things. So, which sort of tells you,
I think it's profit taking.
It could be, but it just tells you there's plenty of strength there.
Yep. And also another thing that we've got to be aware of, and this goes to our clients in the subcontinent and all across Asia, is that the Indian wedding season, you've got 10 or 15 million, I don't know the actual number, getting married, and this festival season is about to start. So there'll be more retail demand. So, for gold and naturally precious metals. Costco are selling it and selling a damn lot of it, and they've just introduced platinum to their market.
Okay, we'll head over to the US. Dollar index is stronger, obviously. Interest rate expectations are getting pegged back a little bit. So obviously we had that 50 basis point cut. Do we need any more cuts this year? That's probably it was a given 3 weeks ago. Yeah. But now it's like, do they need any more at the moment?
Yeah, the hot air seems to be coming out of it. And as we just said, and as you've just, explained the situation, Andrew, we don't know. No one knows. And there's still a fair bit. It's 2 weeks tomorrow is the decision date because that's the 7th of November. We've got to see what happens as far as the IMF and what their central bankers, and no doubt Jerome Powell and his team will be there in Washington for the global central bankers and IMF meeting. It's on today, and they'll read the play. And if they're worried about debt, there's no way I think that they would stimulate debt by cutting rates further.
No, you wouldn't think so. And if we look at the interest rate charts here, finally, it's been that's a 2-year chart roughly. So it's a huge amount of movement there over a 2-year period. But we just only go back probably 3 or 4 weeks, and the 2 years were at just above 3.5%. They're now trading just over 4%. So a 50 basis point rise in the 2-year chart.
Yes.
When interest rates are supposedly coming down.
Going down.
It's a strange situation we're in. But the irony of all this is that the longer part of the curve is going up.
Yes.
The equity markets, they're probably not, you wouldn't say they're under pressure, but they've come off a little bit in the last few days. Yet the economy is still strong. So you would think, I don't know, it's a funny dynamic we're in at the moment.
Yeah, absolutely. And then the other thing is, naturally, you're looking at US dollar index, and that's at, back at 104. It's all the other countries and currencies are cratering. So it's just going to be fascinating. If that wasn't to be no rate cut, where would US dollar index go? And you've got people saying, you're going to see parity euro dollar. And it was at 111, now it's at 108.
Yep.
So it seems to be that downdraft. Yeah, it's King dollar seems to reign supreme at the moment.
Yeah, I think so. And there's plenty going on. Obviously, we're in the thick of earnings season again.
Yep.
All the banks have come out once again. Pretty good numbers on the banks, and the beauty of those ones, they're attached right to the consumer, so they get a really good feel. The tech companies are starting to come out this week. We haven't really had any yet, but so far in the first week, I read a report like roughly 70 or 80% beat expectations again, and it's just...
Well, what do you say about that?
It's relentless.
Yeah, so you keep on saying every week, and you haven't said it yet, but I'm going to say it for you. Strength of the US consumer. Someone's buying the product.
Yes, well, that's right, yeah. So
someone's watching Netflix.
Yeah.
Someone's buying Amazon. Someone's buying, all of these goods and services, and that's displayed as far as earnings.
Yeah, it certainly is. And are they at the top? Well, it looks to be the case, but if you really pick apart that market, particularly the S&P 500, there's been a broadening of that rally, which is a good thing. So it's moved away from the Magnificent Seven. I'm not sure how Tesla is in there, to be honest, but so that broadening is a good thing. So other industries are starting to sort of pick up the slack. But yeah, we'll keep an eye on those earnings over. They go for another sort of 4 or 5 weeks.
That's right.
But by that stage, obviously, the election will be done and dusted as well. So.
Yeah, and even you can stretch that out to even the Russell 2000. That's a great benchmark because that's had a nice run up. And as you say, the broadening out, that really broadens out across those 2,000 stocks.
Yeah, the mid caps,
sure. And I think that's 25, 26 is going to be more centred on them.
Could be, yeah.
It could be a little bit of a catch-up.
Yeah, because it's been...
They gallop too hard, the others.
And the smaller ones have just been left so far behind.
Yes.
That's where the value could be. So, but anyway, we'll keep an eye on things as well.
Yeah, rotation, cyclical rotation, that might be.
Could be. Sit tight, stay invested, be patient.
Oh, great words. You don't change. I mean, I've got to give you that. For a bloke only 95, you bring a lot of wisdom to the table.
Unless you're a day trader, of course.
True.
Yeah. All right, Pete, thanks again.
Thank you, Andrew.
And that's the XM.com weekly market update.